Okay, so what kind of situation do we have at the moment on GBP USD? Now, from a weekly perspective, everything is very straightforward. The market created this beautiful impulse to the downside, first followed by a very aggressive retracement. However, this retracement that started very strong now is definitely showing a deceleration. And basically the deceleration is due to the fact that clearly the market is retesting this very important structure, which was previous support here. Again, support at this level, the market respected it, broke it to the downside. Once it is broken to the downside, it's obviously turned resistance. Then when it's broken back up, it's turned support with a retest. And now that the market is approaching it from below, it's turned resistance. So the market has clearly very strong structure resistance. Now, if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci from the high to the low of the impulse, and what you can see a very important thing. The 0.618 Fibonacci retracement level, the red one, is lining up perfectly with this structure, creating a strong confluence of resistance, which is exactly what you expect in this kind of situation. Specifically, you can see that the market failed twice to close above the 0.618, showing that basically the sellers are trying to protect this strong resistance level. Now, going down on the daily time frame, what kind of situation we have? Now, on the daily, we can clearly see that yes, we did have some daily structure at this level. However, what the market did, the market basically didn't show any kind of weakness at the daily resistance, continuing basically to create higher highs and at maximum equal lows, but never a lower low. So basically it never broke structure to the upside, went for a retest again of the weekly resistance, and basically closed from a daily perspective above. But as you know, on the weekly, the market continued to respect the resistance and now broke to the downside. Now, again, we are facing this daily basically level of structure, which was resistance, but now it's turned support. So now we have some daily support at this level. Okay, so yes, we want to see the market go lower. However, we can't ignore that at the moment we are at daily support. Therefore, we can't be looking for possible short positions. If you already shorted basically from the weekly resistance, then you're already running risk-free on the trade and you don't really care if the market will break, then you will have a beautiful trade to the downside. If the market will bounce from here, then you will have a break-even trade. So you played your probabilities well. But what if we want to be looking for an opportunity in the market? From here is not a smart move. What we're supposed to be doing is waiting for a possible daily close back below the structure, because at that point we will have again this level turned resistance. And at that point, what we will be doing with students, again, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, we will be looking at this nice move to the downside that we want to see from a weekly perspective. But we need to see a clear daily close back below this level to confirm it as new resistance, because now it is support, and from here the market should bounce to the upside. Obviously, it has to face also weekly resistance, but from a daily perspective, it has support at this level. So we have to wait for it to break to the downside before we can be looking for a possible setup. Now, from a COT perspective, if we go and check what hedge funds are doing at the moment on GBP, and basically if you check GBP, you're obviously checking GBP USD. Why? Because all currencies on the spot are traded against the USD. Therefore, if we look at our GBP USD COT data, we're actually checking, if we check our GBP data, we're actually checking GBP USD. And what we can see, net positions going negative from a massive 35K net positions all the way down to minus 6.6K net positions, bringing shorts more than longs, with 38K shorts and 31K long positions, and another 7.2K shorts positions added with the last report. So definitely GBP USD is looking bearish, but we have to wait for the daily close below the structure before we can be looking for potential selling opportunities, because if today the market from here will just bounce to the upside, we won't have any good probabilities. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.